My name's Scott Myers. I'm the founder and president of OptiFuel Systems. I want to talk a little bit about risk and where we're headed. We're very confident in our ability to meet our targets, but we also recognize that there is potential risk in every business and industry. When assessing risk for us, we break it down into four areas: technical risk, schedule risk, market shares risk, and regulatory risk. Starting off with the technical risk, our technical foundation is extremely robust. One of the biggest hurdles for any locomotive supplier is achieving EPE certification and obtaining FRA concurrence on your locomotives. The FRA concurrence process includes stringent safety validations that are required to operate all around the United States. We've not only already cleared that hurdle for our core systems, but we've also the only company that ever received FRA concurrence for locomotives carrying alternative fuels, an element that's essential for next generation locomotives. So while every new configuration of a locomotive requires additional certifications, our core technology challenges are already overcome. The remaining technical risk is obtaining FRA certification for our line haul locomotives, which includes validating the safety through crashworthy testing, vibration testing, and at least 1 million miles of simulated operations. We expect to complete those tests by 2028, at every point our technology will be essentially zero. Schedule risk is order timing, specifically when we start receiving orders for our line haul locomotives. Our aggressive schedule for launching line haul locomotives might slip by a year or two, driven by shifts in Class 1 railroad purchasing behavior. However, based on our analysis, we expect a 25% probability that Class 1s will start placing orders between 2027 and 2028, with the 25% this could shift between 28 to 2030. This risk does not affect our switcher locomotive sales, which we expect to scale between 100 million in sales this year to 750 million at their peak between 2030 and 2032. Market share risk is a key factor driving our market shares, including the significant pent-up demand for locomotives, the efficiency gains our locomotives deliver, the enhanced reliability and ease of maintenance inherent in our modular design, and the increased pressure on railroads to reduce emissions. Our target is to capture 70% of the North American market, and we currently assess the risk of achieving that target at around 60 to 70%. If our capital financing takes longer than expected and our sales team is delayed by a year, we risk capture less market shares long term. Future locomotives sold in the near term increase the chances that regulators will set guidelines based on the limited capability of the two incumbent suppliers, potentially favoring less efficient locomotives or delaying line haul locomotives. Financially, if we only capture 35% of the market, which we believe is the minimum, we would still sell between $2 to $3 billion of locomotives per year to North American railroads, compared to our target price of sales of $3 to $5 billion a year. The last issue is regulatory risks. There are three potential regulatory risk scenarios, two of which work strongly in our favor. First, if emission standards tighten, our locomotives already exceed even the most stringent zero emission criteria proposed by the regulated bodies over the next 15 years. Second, if standards revert to earlier guidelines that permit 100% diesel operations, our locomotives remain the best option in terms of performance, fuel economy, efficiency, and overall cost. The third possibility is that the regulators can mandate a specific power source, such as battery electric or hydrogen propulsion. While we are the only suppliers capable of offering the complete spectrum of power systems, including diesel, natural gas, hydrogen, battery, certain power systems, particularly hydrogen and battery electric, may prove too costly or impractical for line haul operations. This could delay market progress and force railroads to extend the life of their existing fleets. Although we believe that the risk of this scenario diminishes once our line haul locomotives is fully operational, it remains a potential factor until then, which is in the next 2 to 4 years.